Hi, my name is Bob Kendall. You know me from the Kendall Report. I help you manage your portfolios and protect your wealth. The way that I do that is through our software platform, Portfolio Expert. This platform is amazing. It covers over 16,400 symbols. You can build as many portfolios as you want to manage and to protect your wealth. What you'll find by setting up a trial of our software is that we're going to train and walk you through every step to become what we refer to as an ETF hacker. We're going to show you how to take your favorite ETF and make it something really special, and it's owned by you. We also call this building your own personal funds. And what that means is you're going to build your own personal mutual fund. It is all yours. You can pick the stocks, and the software will walk you from A to Z, telling you when to buy and sell, how much to buy and sell, including helping you to protect your capital through the signals that when the market rolls over will get you to cash and out of harm's way. It's very simple from here. It's just sign up, click the link down below. We'll get you in our system. As soon as you get in there, we will notify you of a live webinar to walk you through every step so you understand exactly how to use this product and how to manage your portfolios and protect your wealth. Sign up now, just click the link below. Welcome folks to the Kendall Report. It is Friday. This week has went just like that. It's over and we're already starting to think about the weekend. The week that we just experienced has been substantial. Yesterday's metrics alone were blowout numbers. We saw the claims come in 193,000 less than expected to 576. Continuing claims, as I've been talking about, isn't really a big number. It's at 3.7. It's basically staying solid there. If it gets under 3.2, as I've been saying, then it will be material. But retail sales up 9.8%. It was expected to come in at 5.3. And then we look at capacity utilization, came in better, 74.4. It was just all across the board a blowout day, to say the least. As we come into Friday, we have even more metrics that are going to be substantial. We have housing starts expected to show 1.65 million units, building permits 1.8 million. We continue to see lumber prices and just about anything to do with building just be off the map, including land, real estate. Everything you can imagine is inflating, and this is just the beginning. This thing is going to get completely out of control eventually. But for right now, markets like this stuff. We're getting inflation. Everything is going up in price, even though it's actually one of the major taxation issues ever is inflation. But we'll see how this all plans out in the end. But for right now, it is bullish on the markets, and we're going to continue to see that be the dialogue. All you have to do is look at how the 10-year treasuries traded yesterday. They traded down to 1.53. That's a bit below the 156, 154 that I was talking about. We did get an STX buy signal, so we should see rates come back in. But no one's even worried about rates right now. Remember when they got over 179, everybody was starting to freak out. I've been talking about these yields coming back in a ways. They're doing that, and that was going to be the impetus, if you recall, for the next new highs in the markets. Well, we got all of that today for sure. We saw the S&P up 1.1%, NASDAQ up 1.6%, and the Russell lagged again up 0.4%. And as I've been talking about, I still think that the large cap tech stocks are going to lead the way here. I don't see the small caps or the value stocks taking back control like it looked like they were going to for a while. That game's off for the moment. We're going to see this surge continue in the markets as we go forward. Now, the thing that I have been talking a lot about is our database. And today's a big day, but Friday is where we run our intermediate models. And the daily models actually saw 664 new buys, 206 sell signals. So a 3-to-1 ratio of buys versus sells. So we're continuing to see this very robust numbers starting to come in the database. We didn't quite get over the 42% level. I'll cover that here in a few minutes. But as we come into Friday, I'm expecting to see the markets flatten out a little bit. The S&P got an RTX sell signal, so this suggests that we're going to go sideways, or at least flatten out to the end of the week. And we also saw gold really start to surge yesterday. There's some mixed messages going on. I'll cover all that in the details here in a minute. So let's go ahead and take a look at the charts and see how this week is setting up to end. As we review the WaveTech database, I want to talk briefly about the intermediate database. We're currently at 75.99% long. It's hard to tell exactly what's going to happen, but for sure we're going to see this database remain above 68%. It's possible with the new high close this week that we will see some further traction, maybe move this up closer to 80%. As long as it remains above 68%, the intermediate models are going to be positive. As I mentioned in the opening comments, we did see a fair amount of buying, 664 new buys on the daily models and 206 sell signals, roughly about a 3.1 ratio, positive to negative. And this moved the percent bullish up to 41.65, basically at 42%. I want to see this thing get above 42%. If that happens, we should start to see the markets move substantially higher. I actually believe as we come into earnings season next week that we're going to see this market move substantially higher into the mid 4,200 plus levels as we go through earnings over the next 2 to 3 weeks. But overall, I expect to see the markets continue to get traction both on a short-term basis and remain stable to positive on the intermediates. As I review the S&P futures, they're down 6 handles overnight, 41.56. We did see the futures and the cash get an RTX sell signal. As we look at the market grid for yesterday, you'll see that RTX was the 41.48 level. We closed at 41.62. We are coming in just a little bit. The levels for today, as we look at the market grid for today, S1 41.53. We've actually traded an S1 typically after an RTX sell signal like this. We'll see a move down toward S1, S2. I suspect S1 will be the low for today, and I'm still looking for an R1 minimum, but most likely we'll see an S1, R2 moving up towards 41.82. And that would be an all-time new high. Again, you can see that PPM2 finally is starting to kick in. It is now at a 0.29. That is a very bullish sign. PPM3 has moved up as well. Taking a look at SPX, you'll see that the close yesterday, 41.48 was RXT. The close was 41.70. The high was 41.73.49. As we look at the market grid for today, S1 is 41.63, S2 41.55. That will be substantial support, and most likely we'll see an R1, R2 just like in the futures. I don't expect to see a lot of downside in this market. If we can't get through the R1 level in the first couple hours today, then we're probably going to see the potential for an S2, R1, S2. So once again, the expectation is S1, R2. If we do penetrate S1, then look for R1, S2. That will invert the pattern just a little bit. One other mention on the daily charts is the short-term targets now are 42.13, 42.75. So when I mentioned about going into that 42 handle, we should go above 42.13, I believe, next week. And if we get above that level, then we're going to see 42.65. There's some other numbers on the weekly charts that will be important, and I'll cover that on Sunday night. The next market that I'll cover is the NASDAQ. NASDAQ is down 33 handles overnight. It also got an RXT sell signal. As we look at yesterday, RXT was 13,991. The close yesterday was 14,014. So that is in our RTX cells. We are seeing some weakness overnight. S1, 13,957. We've had a low of 13,952. So this is likely to be around the lows of the session, even though we're printing just slightly through S1. So S1, R1 is the minimum expected on this market, but if we get the pivot numbers are going to be the R1, S1 number. And what I mean by that, if we take out 13,957, then 13,893 would be the next target on the up. If we hold this level where we are right now and we penetrate 14,071, then you'll see the 14,134 level. So this is a unique day when we get into this type of configuration that we could see just a pivot day, and you're going to have to watch those pivot numbers very closely as far as the intraday action goes. As we look at the PPMs, we're seeing PPM2 really starting to accelerate. So we now have PPM1 plus 0.46, PPM2 0.43, and PPM3 is through its first second derivative and starting to set up that acceleration phase. So this market is going to continue higher. One thing I do want to point out, there is some Fibonacci targets that are in play right now, and those numbers are for a move to minimum move to 14,116, and the second target is 14,373. This is the Fibonacci projection, minimum projection on this range. Just taking a quick look at the weekly chart, we'll notice that there is some Fibonacci projections that were recalculated. I covered this in the live stream on Wednesday, but the minimum target is 15,156. So these markets have got a long ways to go. The high target 2 is 16,286. So more on that after we see how this market closes this week, but we are still in a trend phase on this market. We're now in that trend maintenance mode that I talk about a lot, and I'll go through this details on Sunday night. The final market that I'll discuss tonight is gold. As I mentioned in the opening comments, we did see a big reversal on the upside on gold. We printed above the RTX number. That number was 1757. We actually closed at 1766, so we did get an RXD sell signal. We are seeing some moderate downside. The targets as we look at the market grid for today, 1760, 1753 would be the targets. We've already had exactly a 1760 low, so we've satisfied S1. If we do hold this level and penetrate through 1773, then it's likely that we'll move up to at least R2 1780. And as I've been discussing throughout this week, is the key number is going to be on Friday as we look at the weekly pattern. If we can close above 1747, which looks fairly likely at the moment as we're printing 1765, we get a close above that level, you'll notice that PPM1 is breaking out and starting to accelerate through its first and second derivatives, and PPM2 is about to go there, and PPM2 is almost breaking out over its second derivative, and PPM3 has a ways to go yet, but what this suggests is that we're likely to trade above this 0.236 number at 1778 and start to move toward the 21 period moving average, 1802, then ultimately moving toward the 1867 level over the next couple of weeks. So we're setting up a major bottoming pattern in gold. I'll talk about on Sunday night some longer term objectives for gold off the monthly charts. I want to thank everyone again for participating in the live streams and watching the videos throughout the week. Have a great weekend, and we'll talk to you on Sunday night. Hey folks, if you enjoyed this content, make sure you subscribe, hit that like button and the notification bell so you'll know when I do these videos.